Alright everyone, welcome back to the channel for another update on Bitcoin and the total cryptocurrency market cap. So, in my recent videos and over on Twitter, I've been saying how, in my opinion, this most recent impulse to the upside we've had is showing all the properties of a wave 4 correctory wave, and subsequently what comes after wave 4 in a downtrend, that's right, another wave 5 all the way back down to the downside. I'm going to be talking about my price targets for the total cryptocurrency market cap and BTC, backed up by Elliott wave theory. Let's jump right into this. So right off the back, typically after you have a 1, 2, 3, 4, 5 wave impulse to the upside, and then the 5 wave would be finishing off at Bitcoin's previous all-time high. If you look back at previous market structures, I'm not going to go through every single market structure over on here. I've actually made a video on the macro Elliott wave theory for BTC before, and we looked through every single bear market, and every single bear market you have a super clear A, B, C correction, bottoms in, then you have a new 5 wave to the upside, tops in for this bull run, A, B, C correction, and then back down to the downside. Subsequently, after this over on Bitcoin, you had another 1, 2, 3 wave being your highest wave, 5 wave being one of the shortest ones. This was definitely a very, very weak 5 wave though. And then typically what you soon expect after this is something like an A, B, C correction. And if this was in play, if this was already in play, then the bottom should technically already be in for Bitcoin. But what we're witnessing right now, in my opinion, this was definitely not a typical ABC correction. If this was an ABC correction, then we would about to be witnessing our first 1 wave for Bitcoin, and we should be soon off to the moon as we go up to higher price targets. But unfortunately, looking at the state of the markets, I currently don't think that that is going to be a plausible scenario. I think, in my opinion, we've just witnessed the 4-wave correctory impulse to the upside, and we're soon going to be witnessing a violent 5-wave correctory move back down to the downside. Now, I've got an approximate target that I will be giving you, but first of all, let's go through the total cryptocurrency market cap. Let's look at where we think this is going to be going down to, and then we'll head over to Bitcoin and count the individual waves for Bitcoin as well. So, as this is not a typical ABC correction, we're looking at a new 5-wave structure. This is definitely an elongated market cycle, so definitely a 5-wave correctory wave to the downside. If we start off with your 1, 2, this wave structure over here is definitely debatable. However, this one I found is the most valid because you don't necessarily have to have wave 3 being the longest wave, but it at least needs to be bigger than wave 1. And in this market structure where we draw from, we are bigger than wave 1. So coming into your 5-wave bottom, that is where you have your 1 wave done. You subsequently have an A, B, C correction. I don't think there's any other way to draw this one. This is very, very clear cut ABC back to the upside. And now obviously we'd be expecting a nasty 5-wave structure back down to the downside. Repeating the structure, in here the 3-wave is the longest wave, which is definitely very, very nice. Very clear 5-wave structure back down to the downside on this correctory impulse. And then over here you come, you see, you've got a high up here which just rivals this high. So once again, this is a very undeniable ABC correction back to the upside for the total cryptocurrency market cap. So if this is in play, if we've already had our ABC correction back to the upside of our 4-wave right here, then we should soon be expecting a 5-wave correctory or a 5-wave impulse back down to the downside. So, as we think wave 4 has come to an apex and subsequently we should be waiting for this next 5 wave to the downside, we should be worried about 2 things. Number 1, we should be worrying where is our next price target for this 5 wave, and also we should be looking at momentum indicators, oscillators, and helping us decide, is wave 4 really over and are we about to get ready for that next major move to the downside. So one great way to do this is to go over to the Heiken Ashi candles as they smoothen out the trend, and most of the time when you do witness these red bars come in on the daily, you are really getting ready for that next move back down to the downside. And as we've already had a very clear ABC back up, this should, with the start of the Heiken Ashis turning red, this should be the start of our new 5-wave impulse to the downside with a very specific price target. So Heiken Ashi candles are telling us, hey, we're rolling over, we're running out of momentum. On the lower time frames, 4 hourly as well, is really gearing up for that next move back down. If we do look at the daily again, Take this out of the log scale, take this out of the Heikonashis and look at this on a normal scale using Japanese candlesticks. You can see the money flow index. Where is it coming up to right now? It just recently topped out at 96. If we zoom out on the chart, when was the last time the money flow index got this overextended? We were all the way up here completing, I believe this was wave 2. This was wave 2. If I remove these, you can very much see this was your wave 2. And with wave 2, you got very, very overextended on the money flow index. Just like over here on wave 4, we're also very, very overextended on the money flow index. So that is another sign saying, hey, we're probably about to run out of momentum and head back down to the downside. Let's look at some of our other momentum indicators. We've got the squeeze bomb down here. I much prefer using this to the MACD or the RSI, other things like this. This is great at categorically looking at when trends are about to shift. And what are we witnessing over here? Daily squeeze bomb. We've got 2 dark green candles coming in. And typically when this happens, you're getting ready to switch back over into a bearish stance. Very, very little times, or should I say not very often, do we come back down, reset the trend, and then gear up for another one. It is definitely something that can be in play. But looking at Bitcoin, you know, I don't want to make this a heavy TA video on Bitcoin in the lower time frames, because I've been doing that on my channel in the past couple of days. But as you can see, we failed a breakout from this bear flag. So, you know, no matter how you draw this, unfortunately, you would not really be able to argue that we're inside this anymore. The most conservative way to draw it was this, and we're back inside. So on Bitcoin, we've got failed moves, and it looks like we're heading back down to the downside. On the total cryptocurrency market cap, it's showing weakness. You know, your oscillators like the money flow index, they are overextended. Your squeeze momentum indicators heading back down to the downside, clearing it up, heading back to the basics. Heikonashii candles on the daily are getting ready to turn back down. Weekly has not yet switched bearish, but we do have a nasty, nasty blow off top on the weekly, and sometimes when we do this, we're getting ready to push back down or turn back over in terms of momentum. So we should now be worrying, or we should be wondering rather, not worrying. We should be wondering, you know, where is the next target going to be? So one great way to get a estimate of where the wave 5 is going to be is draw from wave 3 to wave 4, and wave 5 should be coming down between the 1.236 and the 1.618 fib. If you are using TradingView, you will have to edit this fib, because this one over here, the 1.236, doesn't actually display itself. This is something else that is not usable in my opinion. But nonetheless, based on our Elliott wave theory on the total cryptocurrency market cap, this is where we should be expecting our wave 5 correctory wave to come back down to. So once again, as we're witnessing wave 5 to the downside, we should probably expect something like this down to your 618. Wave 3 will probably be the most brutal. Wave 4 correctory, and then wave 5 coming in somewhere around about this range. So right off the back, anywhere between about 690 billion, which is the conservative price target, all the way down to 573 billion is where Bitcoin, or should I say rather the total cryptocurrency market cap, should be coming down to. This means the total cryptocurrency market cap, meaning, you know, the summation of all the market caps of every single altcoin plus Bitcoin, should be meaning all of them collectively should come down another 31%, potentially even down another 43%. I don't think it's going to come down that far. But first of all, before we say, hey, this is where we're going to come down to on the total cryptocurrency market cap, let's see if Bitcoin is, you know, thoroughly in line with the analysis that we've just done over on the total cryptocurrency market cap. So let's head over to Bitcoin. Weekly time frame, you can see, once again, your typical 1, 2, 3, 4, 5. We talked about how when you do look at Bitcoin's previous bear markets, you've always got a super clear ABC. I mean, I really don't even think there's a way to draw this that you can say this is a 5 wave. I mean, you could probably draw something like this, but this is a little bit scandalous. I feel like this is definitely much better defined with a typical A, B, C correction back down to the downside. You look back at previous market structures, your correctory wave bear markets was always A, B, C corrections. This is when Bitcoin was in its nascency period. Not really in a bull run, not really in a bear market, just slowly accumulating up. So you know, like I said, if you are going to be saying this is an ABC correction, you would basically be saying that at this moment in time, the bottom is already in. But looking at the total cryptocurrency market cap, a 5-wave makes more sense to me. And the same goes for Bitcoin right now. I think this is much better defined. The correctory wave that we're having to the upside is definitely much better defined as a typical 4-wave rather than a B, and then C, and then this would be your initial, 1, 2, 3, 4, 5, coming back up to your new bull run. So this is what I think we should be looking at for Bitcoin. You've got your all-time high, you've got your 1-wave impulse, 2-wave correctory wave, 3-wave impulse, 4-wave correctory wave, and then coming all the way down to your 5-wave bear market low. So let's look back at the structure. Let's see if these waves are valid. So from wave 1, this was definitely one of the uglier ones because there's definitely 1,000,001 ways that you can draw this. If you are drawing from your low here, 1, 2, 3, 4, 5. I drew this out a few different times. We want to first make sure that your wave 3 is not the shortest wave. So from drawing from here, you can see wave 3 definitely over exceeds what wave 1 did. We went down a lot faster and a lot quicker and a lot further. So this would be the valid wave count. You can draw it over to this middle wick here, make it a little bit more visible. And then clearly 1, 2, 3, 4, 5 down to your 1-wave impulse. We subsequently have an A, B, C. Once again, this one is really not debatable because your A correctory wave impulse back to the upside is higher than this wave over here. So, there's no way that you can kind of draw something like this, or you can't draw it out as a 5-wave structure. This is very, very clearly an A, B, C correction. Let me change the colors of these. So these are 3x as well. Let me make these purple so you can distinguish the macro Elliott wave theory with the white lines, your typical 1, 2, 3, 4, 5, and we're just filling in the waves, making sure this is valid on the way down. So this would be your wave 3. You've got a low here. You've also got a low here. So, on average, just draw it out like this. Wave 3, clearly the most brutal wave here. Wave 5 coming in correlation with this. If you wanted to draw it more accurately and not skewing it like I am just to make it more visible, this would really be what I'd be doing. You've got your wave 1, small wave 2, wave 3, clearly the biggest wave over here, back up to wave 4, all the way down to wave 5, which is your wave 3 impulse to the downside. So after we've had our impulse, we're looking for an A, B, C correctory wave, and this is where it gets a little bit shaky because this high up here is actually slightly higher than this high, but it's barely higher. So it's not like you would draw this as a 5-wave, because if you mark a horizontal ray right here, you can see you've only just poked above it on this C wave. So in my opinion, this ABC is the most valid way to draw this. Now, we're left with the final capitulation to the downside. And just like we looked at over on the total cryptocurrency market cap, what is the price action doing on Bitcoin right now? So let's get rid of some of these. Let's pull up our money flow index, and let's also pull up our squeeze momentum indicator. And let's just clear it up for a second. On the daily time frame, let's look at the Heikonashis. This will be our first signal. Are we turning to the downside on the Heikonashis? Yes, we are. Just like previous times, we've switched back red. It's very, very rare. It's very, very rare that you have a red candle come up on the daily time frame for the Heikonashis, and then you just pump back through it. This is why we use Heikonashis, because they smoothen out the trend. And when we do look at the Heikonashis for this, you can see, it's very, very clear at this moment in time that we are starting to head back down to the downside. So I would personally be expecting running this back. And also, yeah, I just wanted to make sure we were giving these previous targets for the total cryptocurrency market cap on a unlogarithmic growth curve scale, so we wouldn't have to adjust the Fibonacci's for this. And the same way that we do this, I'm going to take out the logarithmic scale so we get more accurate price targets on the linear chart. So as always, we should be now expecting, coming down to your final 5-wave, that you've got something like this. You've got 1, 2, 3, 4, 5, and then your 5-wave would be, once again, we're just approximating these, somewhere around about this range over here. But what we can actually do is we can head back over to the weekly time frame. We can clear this up, make sure I'm drawing from the exact low. Your 3-wave down here up to your 4-wave. We should be bottoming anywhere for Bitcoin between, once again, the 1.236 and the 1.618 box. where does this mean Bitcoin is going to bottom? This means that Bitcoin, according to Elliott wave theory, should be coming down anywhere between 16,000, basically on the dot, all the way down to as low as 13,500. Now, if you're a seasoned veteran of my channel, you would have heard me say 16,000 many times. Now, I'm not going to go through all of the reasons. I really just want to make this like a 10-15 minute video talking about specifically the Elliott wave theory. I prefer to keep this topic separate from the rest of my analysis. But if you do watch me, if you're a veteran of the channel, you'll know that I have many price targets around about the 16,000 range for a plethora of reasons that we'll get into and we'll revise in another video. But nonetheless, it's interesting to see that based on our 5-wave structure of this Elliott wave theory, there's a lot of confluence coming down to your 1.236 and the 1.618 down here. So first of all, we looked at the Heikonashis on the daily time frame, and we saw, you know, this is coming back down to the downside. We're losing momentum. We're probably going to start gearing back down now, as we've already had your A, B, C correctory wave back to the upside. Looking at your money flow index on the daily time frame, I don't think it really matters if we're in a log or not for this, so I'll just keep it out of the log scale. You can see the money flow index, it actually came up to, it's coming up to for the third time actually, but it came up to about 69. And if we zoom out on Bitcoin, the last time we were above / around this 69 region, we were just here on the 3rd of April, and the price was sitting at 47,500 because the money flow index was so overbought at that period in time. Money flow index is basically like the RSI, but it also takes into account the volume, which is something that we've not covered dramatically in this video. Nonetheless, it's not really necessary with Elliott waves. But what you can see is, once again, we're up here at 47,500 the last time the money flow index was this overextended, and we're all the way down here breaking below 22,500. And we talked about this on the daily in my last couple of videos, but Bitcoin is failing this retest right now, and we're drastically dropping beneath it. So it's looking pretty worrying if you're a Bitcoin bull right now. If you're a Bitcoin bull in the long term like myself, really not a worry. I think, you know, myself, I've been in Bitcoin for years and years now. I love these cheaper price targets. I'm definitely not bullish in the short term, but I am a perma bull for Bitcoin. That obviously means I can be bearish in the short term, but I'm a perma bull. I'm always bullish on Bitcoin in the long term. I think if you buy this at any point in the next 4 to 5 years, you'll be in profit. Historically proven so far, at least. But right now, Bitcoin looks like it's topping out. Total cryptocurrency market cap looks like it's topping out. Squeeze momentum indicator on the daily time frame. I mean, even if we go over to the Heikonashis to smoothen out the trend a little bit, the squeeze one also very well responds to the Heikonashis, because it even further smoothens out the squeeze momentum indicator. But what you can see is, even though we're on the Heikonashis, we're still losing that momentum. We've been losing it for 2 days now, and that's drastically portrayed in the price action right now. And once again, the money flow index speaks absolute volumes about the market structure we're in right now. This is coming up to a region where it's very overextended, and there's not much room that we can still have to the upside. Now, does this mean that Bitcoin has to top out right here, and if we push back up another couple $1,000s, the Elliott wave theory is invalidated? Absolutely not. You can see that if we do clear up what we've just drawn over on the price action right now, the Elliott waves would still be 100% valid, even if you came up a bit further. I mean, you can come up above we wouldn't even be anywhere near wave 1. I mean, if you could come up to wave 1, you could exceed wave 1, and this would still be a typical 4 wave. You know, you could come up another $10,000, and this macro 1, 2, 3, 4, 5 correctory wave, or 1, 2, 3, 4, 5 market structure back down to the downside would still be absolutely in play. Do I think that's going to happen? No, but I'm just letting you know, this Elliott wave theory, just because it looks like it's topping out right now, does not mean that it can't take another run to the upside, because, you know, this is macro market structure that we're looking at right now. I think the data that we've looked at should speak for itself. I don't think we need to go into much further detail. So once again, for the total cryptocurrency market cap, I'm expecting a 31% drop to the downside. I'm hedging myself in more of a conservative bet by choosing the 1.236 Fibonacci instead of the 1.618. So in my opinion, in the short term, within the next 2 months, but in my opinion, I think we're going to be down here in about 4 to 6 weeks. After our FOMC, after our GDP, I think the total cryptocurrency market cap is coming down 31% to 690 million. we've already drawn our Fibonacci out, but I will just redraw it for you so you can see. This is where your 1.236 resides at 16,000, and your 1.618 is all the way down here at 13,500. If we clear this up, how far away are we from the downside, from our conservative price target? A 28% drop. And this would beautifully line up with the fact that altcoins are going to underperform Bitcoin in these capitulations, and subsequently it potentially might make a little bit more sense to aim for something like the heartline of this box. You know, once again, not necessarily backed up by any TA, the heartline of this, but somewhere within this region, between the 1.236 and between the 1.618 is what Elliott wave theory predicts for the total cryptocurrency market cap. So let's say, you know, hey, the total cryptocurrency market cap could come down 37% to 630 billion. And let's say BTC USD would come down 28% and bottom at 16,000. I think that would be very, very conservative. And this 5 wave to the downside that we're probably witnessing, or we're starting to witness right now, we're in our first 1 wave back down. So I expect a big drop, correction, probably everyone screaming bull market's back here. Another run back down to the downside, probably another correction in which everyone's screaming double bottom, and then we come back down to the lows. Moon boys are devastated, everyone's getting liquidated, no one's got any more money to buy the dip, and this moment right here is where I think the bottom is in for Bitcoin. So this is what I think is going to be happening for Bitcoin. This is what I think is going to be happening for the total cryptocurrency market cap. I hope you enjoyed today's video. Once again, round about 630 billion for the total cryptocurrency market cap. And for BTC USD, I think $16,000 is definitely in play. As always, my friends, cowboy out. Peace.